Loans and advances. We all know that the major part of the deposits received by banks is lent out, and a large part of their income is earned from interest on such lending. There is a considerable difference between the rate of interest which the commercial bank grants on deposits and the rate they charge on loans and advances. It is this difference which constitutes the main source of bank earnings. Operation and expansion of business and commercial activities depend on a great deal on the availability of loans or advances from commercial banks. In this lesson, we will learn about the procedure of getting loans and advance, cash credits, overdrafts, etc. from banks. It follows from the previous slide that after studying this lesson, you should be able to understand the rights and duties of banks. Know the different types of advances. In terms of Section 171 of Indian Contract Act, a banker may, in absence of a contract to the contrary, retain as security for a general balance of account any goods bailed to them. This right of a banker is automatic, and no agreement or contract is required, and hence called general lien. Bankers has a right to combine two or more accounts if one of them is in debit of customer in the same name and same right. If a customer has more than one account and while making certain deposit does not instruct as to how the deposit be appropriated, the banker may appropriate the amount as per the discretion. Thus, a deposit without specifying the account to which it is meant may be credited to an account of the customer showing debit balance. With regard to deposits in one account, the credit entries are appropriated against debit in chronological order. The primary duty of a banker is to honor check of its customer subject to certain conditions. Sector 31 of NI Act says that the drawee bank of a check having sufficient funds of the drawer, property applicable to the payment of such check, must pay such check. For wrongful dishonor, the customer may claim damage for any loss due to it. A banker is obliged to maintain secrecy of the state of accounts even after closure of the account of its customer, unless required to do so by law, in public interest, in bank's interest, and as per consent of the customer. The bank is responsible to the customer for embezzlement or fraud committed by its employees, as the employer is responsible for the wrongful acts of an employee, provided the embezzlement or fraud is committed in course of employer's business within the scope of authority of the employee express or implied. An instrument with forged signature is no mandate at all, and hence bank cannot debit its customer's account in such a case. While giving standing instructions, the customer undertakes to maintain sufficient balance in the account. If an SI is not carried out on specified date due to insufficient fund, the bank should inform customer and discontinue the SI. Even if deposits is subsequently received in the account, SI should not be carried out unless the customer so instructs specifically. Otherwise, the bank will be liable for damage if due to carrying out the SI subsequently a check is dishonored due to insufficiency of fund. Bank advances can either be in the form of fund-based advances and non-fund-based advances. Fund-based advances include overdraft, demand loans, term loans, cash credit advances, bill finance, packing credit, and mortgages. The credit facilities given by the bank where actual bank funds are not involved are termed as non-fund-based facilities. These facilities are letters of credit, guarantees, and co-acceptance of bills or deferred payment guarantees. Now let us check if we have understood the various concepts discussed in this lesson clearly. There are three ways of lending money by banks. Right or wrong? Wrong. Promissory note is a non-negotiable instrument. Right or wrong? Wrong. Short-term loans are granted by banks to meet the working capital needs of a business. Right or wrong? Right. Before we end, let us briefly revise what we have studied till so far. Every bank has to follow the rules and guidelines laid down by RBI. Banks have to fulfill their duties and can use these rights. There are different ways of lending money by banks, viz. direct loans, cash credits, overdraft, and discounting of bills, etc. Bank loans may be classified into three categories, that is, short-term loan, medium-term loan, and long-term loan. Short-term loans are granted by banks to meet the working capital needs of business. Medium-term loans and long-term loans are generally known as term loans. These loans are granted for more than 1 year for heavy repairs, expansion of units, modernization or renovation, etc. Such loans are sanctioned against the security of permanent, immovable assets. Banks also provide non-fund based services like letter of credit, guarantee, and co-acceptance. A negotiable instrument means a promissory note, bill of exchange, or check payable either to order or to bearer.